With the S&P 500 now just a couple of points away from yet another record high, has the magic 2,400 number become some new support? Welcome to Trading Nation. I'm Brian Sullivan. Let's get technical and find out. Todd Gordon with TradingAnalysis.com, Mark Tepper with Strategic Wealth Partners. Todd, chart this for us. 2,400, how key, how supportive is it?
You're right, Brian. 2,400 is support. And in fact, I'll be leaning against that to establish longs. I think the upside, however, is limited. I'm looking at, again, a technical resistance channel that has defined this entire uptrend around 2,500. So I think for this trade, you need to be in, you need to be out. I'm looking at a longer-term top around 2,500.
Okay. Mark Tepper, would you agree with that? Is there some beef you have with the S&P 500 in general?
No, you know what we do? I would agree that the path of least resistance at this point is up. We're definitely seeing a recovery in top-line growth, which is being driven by pricing power gains. Investors are very confident because the global growth story is real. And then furthermore, you see this recent softening in inflation, which is causing many people to believe that the Fed could now proceed even more slowly. So stocks, some people may say they're overvalued. We feel they are less expensive versus competing assets like corporate bonds and treasuries. Now, we would certainly become more defensive if we were to see more aggressive Fed tightening or profits come under pressure. But we actually expect earnings to continue to accelerate through the end of 2017 and into the beginning of 2018, where they'll finally moderate. And then if growth decelerates midway through 2018 and margins do narrow, that could trigger a bear market, but we are at least a year away from that. So we're very comfortable with the current direction of the stock market.
Todd, I'll come back to you for the last word then. Is there anything on your charts or fundamentally that concerns you?
Sure.
Worries you?
Yeah, Brian, not even on the charts, but as we know, price action leads the underlying fundamentals. So the fundamental deterioration, growth in earnings, as Mark is referring to, will be represented in the price action first. So we actually see a pending top in the market in the next 3 to 6 months, and at that point the fundamentals will confirm as the Fed begins to wind down the size of the balance sheet, drain some liquidity from the system, and that's what will eventually confirm what the price action has already told us.
All right, Todd and Mark, a good look there at the broader markets as well. I know we've enjoyed some good times, and chart-wise looks like they could continue. Gentlemen, both, thank you so much. Folks, thank you for tuning in to Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.